Hey guys, welcome back. Welcome back to another session of the IC Markets webinar series. And today we'll be focusing on advanced stochastic oscillator strategies. Right? Sorry for being 1 minute late. I need to rush off to the toilet for a bit. Now, can you guys, can everyone hear and can everyone see me? Just checking first. Awesome, awesome stuff. I see some familiar, familiar. I want to say familiar faces, but yeah, I can't really see you guys. Familiar names around here. Who's here? Who's here for the first time? Yeah, who's here for the first time, or rather, how many times have you guys been to this webinar? A third session for Yena. Okay. Yeah, Marcel, welcome. Marcel, Timo, first time for you guys. Right, I can see quite a number of guys. Vince, um, Marcus 5 times. All right, David, you've seen all my sessions. Awesome, awesome. Right, that's really great. I'm just curious, right? Where are you guys tuning in from? Right, which countries are you guys tuning in from? On London, all right. Thailand, Germany, Sydney, Australia, Germany, UK, London, Cyprus, nice. Romania, Australia, quite a number of you, Australia, Bahamas. I love my FIBO strategy. Thank you very much. Mars, Antoine, who's from Mars? Wallet's from Mars. Awesome. Nigeria, Tasmania, awesome. Sri Lanka. Now, guys, okay. All right, so Italian in Norway. Okay, that's very nice. Second time, right? So for those of you guys who are here for the first time, right? This is part of the IC Markets webinar series. I got great news for you guys. Actually, I got great news for you guys. Is that previously, remember we are doing all the little bits of surveys and seeing whether we can increase the number of webinars a week, right? So okay, wait, Vince, it works. So I can share with you guys some updates on that front, right? Moving forward, we will be able to from May onwards, actually, if I'm not wrong, just let me check the dates. From May onwards, that's right. From next week onwards, we'll be having 2 webinars a week, right? So one on Tuesday and one on Wednesday. So let me just show you guys some of the updates over here, right? So this is the stochastic webinar today. More than 1,300 of you guys are here, right? So moving forward, awesome stuff, guys, right? We're gonna have on next week, May the 4th, May the 4th be with you. Star Wars Day. Not sure who's a Star Wars fan here, right? Maybe I should teach us trading strategy on like using the Force, right? Using the Force to pick out strategies, right? But anyway, moving forward on each Tuesday and Wednesday of this week, right? Of each week, we'll have an educational session followed by a live analysis session. So live analysis session is where you get to practice what we learned the day before, right? I hope you guys will tune into it, and that is where I can answer a lot of your questions. We'll be practicing Fibonacci retracements, extensions, oscillators, divergence, support and resistance, supply and demand, price action, correlation. We'll be throwing in everything and kind of analyzing the markets together, looking for the best setups. All right. Now, I also have the question, right? Yes, the live session will be recorded, right? It'll be an awesome session, right? We got approval from IC Markets because of the great response from you guys that we're gonna ramp up the analysis, the webinars that we're doing, and we're gonna ensure that we provide you the guidance, right? The guidance, the hand holding, the education, to not only learn but also to apply. Right, so that's one of the great things. So keep a watch out on that. Right now, where do you find this? Is very simple. When you go onto the main IC Markets website, you want to go to more, right, and you want to go to webinar. When you click on webinar, right, scroll down a little bit, and then you'll be able to see the upcoming webinar to register for. For those of you guys who are asking for the previous webinar series, you can scroll down here and you can see all the different webinars that we've been doing, right? So we recently covered the Fibonacci extension, retracements, touch on trade management, price action. they finally put my picture here. I like to think I look better when I was younger. Yeah. Okay, man. Uh, yes. Yes. Okay. Now let's begin first. I don't digress too much, right? I don't want to digress too much, right? So, once again, disclaimer, right? Disclaimer is that this webinar is purely educational in nature. So do not take anything which you share. Nothing should be construed as investment advice. Always do your own little due diligence before trading. Okay. Now, our agenda for today. Um, our agenda for today, right? First, we're going to talk about the ideal stochastic setting. A lot of people think stochastic, is 1333 or 1433, right? But we're going to talk about what's the ideal one. We're going to look at whether where's my where's this thing? Yeah, let me pull up my handy pen. Right, we're going to talk a little bit about the 80-20 or 70-30, the extremes of the stochastic oscillator, right? And then we're going to look at these four very interesting approaches to using stochastic, right? This is an advanced way of interpreting stochastic, which I kind of used back when we were in the research, in the institutional research firms, right? It's very interesting. So stick with me. It's an awesome session, just like all of our IC Market webinar sessions. We focus on giving you the good stuff. Yeah. Now, stochastic oscillator. Um, just to give you guys an idea what the stochastic oscillator is, right? If you load your IC Markets MT4 terminal, right, you just need to go here. I just realized I was talking so much about stochastic oscillator, advanced stochastic oscillator strategies, that some of you guys might not know what a stochastic oscillator is, right? I'm going to give you a 1 minute crash course on what a stochastic oscillator is. Okay, a stochastic oscillator basically measures the momentum of the markets. What you will notice is that it tends to follow the markets quite well. Like in this case, you can see that when the market makes a big reversal from here, stochastic also made a big reversal. So it kind of fluctuates. It's called oscillator because it fluctuates between 100 and 0, right? 100's all the way at the top, 0's all the way at the bottom. So it kind of fluctuates. And usually in standard stochastic oscillator settings, when you're looking at a normal stochastic oscillator, they usually provide you 20 and 80 as a levels to look at. So anything above 20, anything above 80 means that price might reverse soon. Anything below 20, price might bounce up, right? I don't want to dive into the mathematics of it, right? But basically, that is what stochastic oscillator is. On TradingView, if you load it there, right, on TradingView, if you click on indicators and you look stochastic, what you notice is this thing over here. Let me expand it up. Same thing, you'll notice that there's at the top is where the reversals happen, at the bottom is where the bounces happen, right? So this is the stochastic oscillator. Okay, it fluctuates between 0 to 100, up and down, up and down, up and down. Okay, so that's what you need to know about the stochastic oscillator. Now, there is I realized I have not I have not introduced myself yet, right? So let me stick to the PowerPoint, right? So introducing your host for today is me, Desmond, right? So let me share with you guys a little bit about me. For those of you all who are attending this webinar for the first time, I run the award-winning research firm, Everest Fortune Group, right? Along with the Forex Army, which where we create our crazy bunch of indicators and EAs. I'll be showing you some of them in the webinar, right? And we are finalists for 2019, 2020, and 2021 for Best FX and Best Equity Research, right? We have a team of CFA, CMT, and CFTE accredited traders. And most of the time, our business is in advising, providing research to banks, brokers, hedge funds, treasury departments, right? But with this partnership with this collaboration with IC Markets, what we're looking to do is we're looking to bring that institutional grade research and education approach to trading to you, right? So what you will notice is that a lot of what I'm covering is more advanced in nature. You want the simple stuff, there's baby pips for that, right? Baby pips Forex Factory, you can find the simple stuff there, right? Most of what we're covering are the tough stuff, right? And and uh and and yeah, so what I always encourage you guys to do is to ask your questions. Okay, we have this, I have this other screen open here, right? Just tracking all your questions, right? So anytime you have a question, just ask it. If it's relevant to the topic that we're covering, I will cover it. Otherwise, we'll try to I'll try to take it towards the end of the webinar. All right. And thank you for your kind words, Saida. Right. So yeah, that's it about me. Now let's begin on what's the ideal stochastic settings. Wait, I need to turn off my fan. It's so cold. The ideal stochastic settings. All right. So who over here can tell me what stochastic settings do you use? Is it, oh whoops, is it 1333? Is it 2133? What kind of settings? Okay, I can see Timo putting in 1033, right? We got David saying 1833. Neil is saying 33 to 66. John says the default one. 1436, 1533, 533, 2133, 820. All right, well, a lot of them. All right, so very interesting point on Ashish, right? Say that you're forcing a linear oscillator on a non-linear time series, 833, 1433. Wouldn't RSI be enough? RSI works on different cases, yen, right? But stochastic has its benefits, especially, and I'll be showing you, today's sessions on stochastic, next week's sessions on RSI. So when they work together, it works very well. All right, 2100. I'm not sure if that works, right? Okay, now I can see you guys got quite a number of your settings already used. Now, what I want to share with you guys is that the ideal stochastic setting is actually dynamic, right? It means that you need to see what the market is telling you. You need to see what the market is telling you, and from there you kind of fine tune it and see which stochastic setting gives you the best insight. I will show you roughly what I mean on that later, rather in the next 2 slides, right? And the next important thing which I want to ask you guys, who uses 80-20? Who uses 70-30? Who uses something else? What do you guys use? We got Julia saying 80-20. 80-20, some of you guys, David Roberts, Marcus saying 70-30, a little bit of both, right? 82-20, interesting. 82-15, right? 90-10 by Timothy. All right, 90-10, 75-25. All right, I can see a lot of you guys are using different kinds of, most of you seem to have an answer, right? 10-90, 70-30, 80-20, right? I like Nick's answer, depends where resistance is, right? I see Shaquille saying 55-22. Now guys, again, the ideal setting is dynamic in nature. The ideal levels are also dynamic in nature, right? If you think about it, who mentioned that 80-20 is the correct level to use? It's more of a guideline. It's a guideline. It's not written, it's not written in like written in stone. Yeah, written in stone, written in stars. Yeah, written in stone. It's not written in stone that 80-20 or 70-30 is the right levels to use, right? If you think about it, the markets don't just obey 80-20 because some guy out there wrote that it's 80-20, right? Or even 100-0, right? And I like Remiga's answer that he's not using any, right? Because it's dynamic in nature. And this is what I would like to show you. The very first thing I want you to know, the very first advanced approach to interpreting the stochastic oscillator is that there are no levels. You watch Matrix, there is no spoon, right? So in this case, there are no levels. There are no settings. It's all dynamic, right? So what I want to show you guys is that the first thing I want to show you is what I call the true stochastic levels, the hidden levels, where the reversals occur. To do that, this is an example, right? To do that, we will look for the big reversals where it happened. In this case, you can see one big reversal here. It coincided with this level. Another big reversal here, it coincides with this level, right? So this, and this. So what we notice is that we are looking for the hidden resistance level called the night, and it is at 93.52%, right? It's at 93.52%, right? Just checking if you guys, can you guys hear me? Because I have a couple of people saying that there is no sound. Okay. Okay, everyone can hear me. All right. So you can see this, right? The first, all right, all good. Okay. Now, the first thing you need to do is to look at what the market is telling you, and from there you interpret what is the strong level of resistance, what's the strong level of support, right? You're looking at where the key reversals happen. The key reversals, each time the market makes a significant enough reversal, right? It seems to coincide with this 93.52%. It's not happening at 80%, it's not happening at 100%. It seems to react off 93.52 multiple times. Now, the key here is to at least look for 4 out of 5 reversals that happen at a certain level. Okay, you need a high enough probability, right? Increase the brush size. Can't see where you're pointing. Let me see if I can increase the brush size a bit. Okay, this has a highlighter, but it doesn't allow me to. Okay, I'll just use the, what if I use a highlighter? Okay, no, I gotta use a pen first because um, I'll use a highlighter. Okay, I'll toggle between both, right? So what I want you guys to see is that a big reversal from here coincides with a big reversal on stochastic. All right, so you're looking for not a sample size of 1. You're looking at least for a sample size of 4 out of 5. So one big reversal here, it happened here. Another big reversal, it happens here. Another big reversal, it happens here. And then last big reversal, it happens here. So when price is working its way up to the 93.52%, it is not guaranteed that price is going to reverse, but there's a higher chance that it might reverse than it doesn't, right? If you guys have been following my other webinars, right, a lot of it is not just using stochastic. It's not about using one thing and one particular strategy and trading that strategy. It's about the combination. It's about the combination of strategies. All right. So in this case, the stochastic oscillator strategy might increase your odds of getting a profitable trade by 20%. Okay. If you combine that with support and resistance, it might be another 15%. You combine that with Fibonacci retracements, it might be another 15%. You combine that with price action, it might be another 15%. Maybe throw in RSI, it might be 5%, right? So by themselves, they might not stand a chance of giving you an edge over the market. But when you combine multiple of them together, right? You got 20, 30, you got 50, 65, you got 75%. No, you got 70%, right? So that's the important thing here. You're looking for a confluence of probability to be in your favor, right? Before you call it a trade. So it's the same thing with stochastic. It's great, but you shouldn't use it by itself. You always look for a way that it can complement your trading strategy. The particular kind of approach that we're doing, right? The particular kind of approach that we're doing is looking for reversals. Okay, now I see some of you guys asking what time frames does it work best. Yeah, what kind of time frames it works best in. Look for 4 out of 5 of what, right? Okay, now let me share with you a little bit more, right? So this is a screenshot from one of the indicators I built. It's called the TFA True Stochastic Indicator, right? And let me show you what I mean by 4 out of 5. What we do is we look for the past 5 big reversals. 1, 2, 3, 4, 5. These are the 5 big reversals. The red ones are reversals, the green ones are bounce. Right? So each time a reversal happens, we look for where the reversal happened on stochastic. So we notice that it happened here once, it happened here a second time, a third time, a fourth time. The fifth time you notice the fifth time it was beyond the area, right? So we highlighted the areas from 95% to 100%, right? That is where the big reversals happen, right? That is where the big reversals in price happen. So we have a 4 out of 5. So we got 80% confidence level on this particular area. Okay. Next time price comes up to here, right? We take a trade and it goes down, right? You can see that it comes up here, it goes down. So that is the concept behind a confidence level. You look for the past 5 times that price make a major reversal and see on stochastic where it had happened previously, right? Where it had happened previously, right? And from there, if you have at least 4 out of 5, if you have at least 4 out of 5, which is an 80%, confidence level, then the next one, right? This is the first, second, third, fourth, fifth, right? Then the sixth one that is going to happen over here, right? Then you have 80% confidence that price will reverse. You can combine it with multiple things, but by itself, you already have a decent chance of seeing price make a good reversal. Okay. Now, time frames, right? Usually at time frames, any time frame work well. I tend to gravitate towards the H1, H4 time frames. Okay. So how would the Fibonacci be used with this? So for example, right, for some of you guys who attend my previous webinars, Fibonacci, support and resistance and stuff, right? Here is what I mean by combining it with a trend line. Next one, I'll show you Fibonacci. Okay. I just people saying don't have sound right now. I can confirm there is sound. Please check your speakers. Okay, now so this is how you combine it with a simpler form of analysis, which is support and resistance, or rather what's the word for it, trend line, right? So you can see in this case we're looking at price. There's a nice little 1 bounce, a little bit of 2 bounce, 3 bounce, and we're thinking price, we're wondering whether price might go up. Okay, like price is making that little bit of a bounce here. What we do notice is that each time stochastic reaches the 4% level, right? 4% level, there was a nice little bounce here, right? It touched here, it also bounced here nicely here. Each time it touched the 4%, it also bounced nicely here. This level a bounce, this level a bounce. So now it's down here, it's making a small little bounce, and we're wondering how high a bounce this might take us to be, right? Yeah, so how high a bounce this might be. So what we have determined is that stochastic has forecasted that this bounce will be successful, right? Because it has bounced off the 4% level. And true enough, we can see that price actually, it doesn't show the stochastic, but yeah, price actually bounced up very nicely to our target. So this is one way, right? This is one way that you can use stochastic, this hidden level of support, hidden level of resistance on stochastic, to complement your trend line when you're using trend lines. Okay. Now, okay, we got a advice from Vince. For those who are having problem with their sounds, try to switch to the phone call and back to the PC audio. It will work slightly better. Right. So now, you guys have asked a question on how do you determine take profit. I recommend watching my webinar on trade management, right? On the link which I shared you guys earlier, right? That will share with you guys how I determine my take profit targets. Okay, this session will be focusing a little bit more on stochastic. Now, I'm just going to show you one more example, right? I'm going to show you one more example before we look at best settings for the stochastic oscillator. Okay, you can see this is what we call a Fibonacci extension, right? There's a 100% Fibonacci extension here. Okay, so this is one element. For those of you guys who know, this is what we call a pullback resistance, right? Price broke out from here, or rather it's actually more like overlap resistance, right? So you can see price test 1 time, 2 time, right? So this is a pullback resistance. This is a pullback resistance. right? And then we also notice that stochastic, I know you can't really see it because it goes all the way into the past, but there's a 97% resistance here. So stochastic is right at this level, right? There's a right at this level. There's Fibonacci extension, pullback resistance, oscillator, and from here to here, if I'm not wrong, is a 78.6 retracement, right? So there are four things that line up nicely over here, and that leads us to call the move down here, right? That leads us to call the move down here, right? True enough, you can see price actually reverses very nicely from there, and you know it reaches the take profit target. Which, if you want to know how we determine the take profit targets, you can actually go and you can watch the webinars. Some of you guys asked what's the link to the webinar series, right? I'm just going to copy this and I'm going to share it to everyone over here, right? So if you want, please head over to here and watch this webinar on understanding trade management. Okay, now we got a very good question from Marian, who's saying that in this case, wouldn't stochastic always go towards the 100% and the 0%? That is not true actually, because if you look at let me see if I can find examples here. Whether it's at 93%, whether it's at 95%, whether it's at 4%, right? It all differs. Sometimes it's at 60%. Sometimes it's at 80%, right? You need to see what the market is telling you, right? So it's not, you don't just use 0 and 100% as the best levels, okay? Right, but it's a valid point that you mentioned. I'll show you some examples later. Now, let me show you what I mean by the best settings for stochastic. Okay, let me see, where are we? Yeah, best settings for stochastic. If I were to look at here, if I were to look at the let's see. Okay, so one example which I'm going to show you here, yes, Mark, this will be shared, right? One example that I'm going to show you here is that a stochastic oscillator, right? You can see that I have a few different settings over here. I have the 13%, 25, 34, 55, and 89, right? I kind of rotate between a couple of stochastic settings, right? If there is a cross, it means that there are no valid settings over there, right? But in this case, you know, I give myself a range of stochastic settings. So remember, always look for the stochastic setting that suits the market, because not all of them would suit the market. In this case, right? So touching on your point earlier, Marianne, right? You can see that the stochastics, the level of support is at 86%, not 95%. So if I click on this, what we can see is that let me see if I can show it to you over here. The first reversal happened here. I'm going to hide this. Zoom in a bit. The first reversal happened here. Stochastic was at 90%. Second reversal happened here. Stochastic was about 90% too. Third reversal here, stochastic was 86%. Fourth big reversal here, stochastic was at probably 86%. So the hidden level of resistance is 86%. We can see that the next time price actually came up to this level, it reversed very nicely from the 86%, right? And that was the level where price just dropped from there. Okay, so it's not always 95% to 100%. What do the different stochastics change to the indicator? So the different stochastic settings tweak the sensitivity. Okay, so let's just look at this. All right, so I'm going to come in here. I'm going to edit this stochastic oscillator setting. I'm going to remove this. I'm going to remove this. I'm going to make this line slightly thicker. Okay, now, so I usually like to use 5. So the 5 is just more or less the smoothing. You notice the blue line stays the same when we change the tree over here. Okay, I usually like to use 5. Anyway, if this is 13, 21, 34, 55, 89. You notice different stochastic settings tell you different things, right? So why do I call it a hidden levels? Because it's not immediately obvious, right? So if you look, oh, this is 89, right? Yeah, 89 is over here. So it's not immediately obvious. I would have to go and search for it myself. Meaning, in this case, if I were to search for this hidden level of resistance over here, what I would need to do is I would need to, okay, this is one big resistance level. Then I'll look at the next big resistance level, right? And I'll see where the other big reversals happen, right? So maybe this is where another big resistance happened, right? So I try to line up all the levels together and see if I can find any levels, right? So in this case, it's a little bit hard. Yeah, this area is a little bit too big for me, so so I will not consider it, right? I usually require it to be within 5%, right? All of them to be within 5%. Okay. Now, so some of you, I'll share with you guys a little bit later how I get this multiple set up, right? But basically, what this does is that this indicator tells me where the hidden levels of resistance is. It from 86 to 90%, 92 to 96%, right? And you know, if I go into the D1 chart, it's from 96%. If I go into the M15 chart, it tells me a different story. If I go into the 5-minute chart, it tells me a different story. Okay, so it helps you identify where the hidden levels of support and resistance. Now, that is one of the key things I want you guys to learn. Okay. Okay, I can see quite a number of questions coming through. Okay, if you guys want this MT4 indicator, it's actually one of the indicators that I built over at the Forex Army. It is not endorsed by IC Markets, rather it's one of the crazy indicators I built. If you want to, you can go to the forexarmy.com, right? You can go to forexarmy.com, go to TFA Trading Tools, and choose Stochastic, right? So this is where you can find the stochastic oscillator, which the true stochastic oscillator, which I showed you, right? I'll send it in the group chat if you want to take a look at it. Again, it's not endorsed by IC Markets, but it's just one of the stuff that we built. You can still look for all these hidden levels of support and resistance yourself, all right? And I recommend that you try to look for it yourself first, right? And only if you cannot find it, if you're looking through too many markets and it's too tiring for you, then maybe you can consider the indicator. Otherwise, try to identify it yourself. I want to move on to the next topic. Okay. No, it's not available for MT5. No, okay, so let me share with you how I will find this on TradingView. Okay, how I would find this on TradingView, right? If I'm looking at Euro franc over here, the first thing I would do, okay, maybe let's look at pound dollar. Okay, look at pound dollar. This is the process which I would use to identify where the hidden levels of resistance. Okay, the first thing I'll do is I will pick all the big reversals that happen, right? This is where you need to understand market structure. Okay, so what do I mean by market structure? I will look at, where is it? I'll look at where the big reversals are happening over here. These are where the big reversals are happening, right? And once I've identified these reversals, what I'll do is I will go for this thing like a vertical line, and I will draw a vertical line and see, and it will extend all the way onto my stochastic, right? I'll just draw this vertical line. As you can see, I'm drawing a few of these vertical lines now. I'll draw 5 of these vertical lines. And then personally, what I like to do is I like to use percentage D. Okay, because percentage K is a little bit wonky. You know, price, it fluctuates a little bit too much. I like to use percentage D. Okay, now that I've identified this, I will see where the levels occurred. Okay, where I can see one of it happen here. I can see one of it happen. Sorry. I can see one of it happen here. I can see one of it happen here. I can see this one happen here too. This one happened here. Okay, so I've realized that this, 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 this. Okay, this one is outlier. Okay, okay, this line over here is outlier. Okay, I got one. Okay, I got one, two. Okay, one, two, three, four, five. Okay, this is okay. This is wrong. Okay, okay, okay. So now that I've identified this area, well, my mic keeps dropping. Right? Now that I've identified this area, I would highlight this area, right, as a hidden level of resistance. So this is clearly telling me that the big reversals tend to happen. Where does the big reversals happen, right? If we just expand this, the big reversals happen from 91% to 97%. Okay, I would be very aware of 91 to 97%. Okay, so anytime I'm calling a big reversal, I will see if stochastic has at least reached the 91, 97%. So if I'm tempted to call a big reversal and price is at the 80%, right? You can see that maybe price is making its way up and is now at the 80%. I would be slightly wary of this, right? I'll wait for it to go slightly higher, reach this big level before I call the mega reversal, right? So it's an area, right? No, it's not available for NinjaTrader. I try to keep the distance between like this area. I try to keep it 5%. In this case, it's 5.5%, so I think it's still okay, right? 91.8 to 97.3, that's 5.5%, right? You don't want an area to be like this, right? You don't want to have one massive big area like this. You don't want one big area like this. That's not going to help you, right? The more you can fine tune it, right? The more you can fine tune it, the more accurate your reversals are going to be, right? David, yeah, I think we can work something out for you, right? If you're interested in getting everything, right? Now, why number two is wrong, right? It's not that number two is wrong. It's rather number two is an outlier, right? So you notice over here, right? Let's see if I can expand this, right? Number two, the intersection for number two occurred over here. It is at 85%, right? So it's a little bit, it's different from the rest of them. The previous 1, 3, 4, and 5, they all occurred within the 91 to 97% range, which is about 5.5%. Only this one occurred at the 85%. So we still, out of the past 5 times, we still have 4 of them that occurred within that area. So we still have an 80% confidence level, and that is good enough for us. Okay, so that's an important thing to take note here. Why do I use the low of number two and not the high? I'm looking for the intersection, right? So let me show you. Let me zoom in a bit, right? So how I determine this intersection is I actually looked at here. You can see that this was the high of price, right? And I just drew a line all the way down, and I see where it intersected stochastic. That's the important thing, right? You must see where it intersected stochastic. Okay. Now, do I adjust this zone? Yes, yes, it's a dynamic zone, right? Meaning that this, you don't just set it and just leave it. It's a dynamic zone. Okay, so the zone keeps changing over time, right? So, but I got questions from Marcel asking how many times does this reversal zone is useful before it loses efficiency, right? It is we try to keep a running 80%, right? Running 80% confidence level. So what I mean by that, what I mean by running 80% is that if price comes up to here, let's do a test. If price comes up to here and it reverses, right? If same thing, price comes up and then it touches this level. It touches, price comes up all the way here. It touches this level and reverses, right? do we have 80%? Do we have 80% in our efficiency, confidence level? Yes or no? We got Yen saying no. A couple of you guys say yes. So what I mean by a running 80% confidence level, it means that if this worked out well, I will look at this. This will be my number 1, 2, 3, 4, 5, right? Out of these 5, right, all of them work except this. So I still have 4 out of 5, which is great, right? Exactly 80%. That's the important thing to take note. It's always a running 80%. Every new one that occurs, right, you disregard the old one at the back. So another one occurs, you disregard the old one at the back, right? So it's a running 80%. Important. Okay. Now, how do I determine 21, 34, 55, 89, or 13? So what I like to do is I like to I'll look at stochastic and I will toggle. I'll look at 13. 13 usually is a bit of a mess, so I tend to stay away from 13. I usually start at 21. Then I'll see if 21 has any levels. I'll look at 34 if there are any levels. I'll look at 55 if there are any levels. Then I'll look at 89. All right. To me, the higher the number, and if you can find a big reversal on a higher number, that is usually stronger. Okay, because 13 is it's very easy to find levels on 13 because price keeps going up and down so often. But it's much more difficult to find a hidden level of resistance on 89, right? So Victor is asking whether the standard settings for stochastic. The standard setting of stochastic, it could work, but this approach that we're using, we tend to tweak it a bit so that it is like it follows a range of 21, 34, 55, 89, and uses percentage D as 5 and smoothing as 3, right? So that is the approach that we tend to use. Do you do the same thing with the lower end of the score? Yes, I use the same thing to find support too, right? I use the exact same thing to find support. What number do I think is the best? I tend to gravitate towards 34 and 55, right? Ultimately, it's not about what's the best number, but whether any of it, like I was showing you over here, I could load, I could load Cat Frank and load my TFA through stochastic, right? And I can see if there are any levels, right? So in this case, see, if I'm the 4-hour chart, what it's telling me is that I have absolutely no levels. If I'm on the 1-hour chart, it tells me that, hey, there is support at this 4.6 to 8.1%. I click view and let's take a look. All right. I wonder where is that my GoToWebinar draw little thing that I can use to draw. Seems to be missing. It's weird. Okay, yeah, so you can see in this case, one big reversal happened over here, right? You notice that it occurred over here. Another big reversal happened and it occurred slightly below. Oh, sorry, just let me maximize this. It occurred slightly below. A big bounce happened. It occurred at the 5.25. A big bounce happened. It occurred on the 7%. So we have 1, 2, this one didn't work out, 4. I think one more happened over here. Yeah, there you go. One more big bounce happened here and 5. So this is 1, 2, 3, 4, 5. Out of 5, only 1 didn't work out. So we still have an 80% confidence level. And so it's telling me that out of all these different stochastic settings and permutation, the only one that works is 3453. Right? The only one works is 3453. We got a question coming in. What would happen if you change D? Right? So if you what would happen if you change D? Percentage D is actually the percentage D. You notice, but there's percentage D and percentage K. Okay, percentage D is a slower one. Let's see if I can zoom in and show you guys. Oops. So you can see that stochastic always has 2 lines. There's the faster line and the slower line. I'd like to use the slower line to look for these key reversal levels, okay? Because we are already forecasting into the future. So this by itself is enough to give us a leading, so-called a leading advantage over the market, okay? It's enough to use percentage D for this, okay? We use five, it says could and should we increase the sample size? Okay, so we could actually increase the sample size to 10 bounds. So for example, in this case, right, we could increase the sample size um, so instead of having 5, we could have 10. And an 80% confidence level, it means that, well, look, most of the time you might not be able to find anything. Let's just look. Okay, I managed to find one over here, right? So it actually looks at the past 10 times it bounced, right? And you can see like where the reversals happen. 1, 2, 3, 4, 5, 6, 7. I think I missed one 8, right? But I can see that we have an 80% confidence level here, right? So the thing is that yes, you can increase your confidence level, the sample size to 10, but what that will result in is that it will result in a lot less cases. Like in this case, at least we find one, right? We can see where the reversals happen, right? So if you have a sample size of 5, usually it's enough. Sample size of 10 is a little bit of an overkill. It's great, right? But you have a lot less instances of that happening, right? Yes, this presentation is available for later viewing. Once again, just head over to icmarkets.com, icmarkets.com, go to more webinar, right? And all the past webinars that we've been covering, you can watch it over here. Okay. Now, uh, confidence interval. So we got one more question. I realized that we might not be able to cover the whole topic today, right? But it's very good that I can see a lot of you guys asking questions on the stochastic, right? I do want to let you guys know one more thing, at least for stochastic, and that's called the hidden level, the breakouts. Okay, maybe we'll stretch this stochastic topic out over 2 webinar sessions instead, because I don't think we can cover all of it in one session, right? What I mean by the breakouts, okay, stochastic, if you look closely, it's the same thing. You look for the hidden level, you notice that the reversals happen over here, the reversals are happening over here, and the reversals are happening over here. Suddenly, right, suddenly we see that stochastic has went above this 93% level, is over here. Now what we're looking for is we're looking for stochastic to break this level, right? So if stochastic kind of breaks this level and it goes down, the moment it breaks is where there's a high chance that a reversal might happen, right? So this is very, very useful when you're looking for, you've identified a big level, in this case 93%, and you notice that stochastic is hovering very nicely above it. So what happens is that we see that price broke that 93%, right? And at the exact time it broke, it actually also triggered a big drop in price, right? Thank you, Timo. I'm glad it's opened your eyes a lot, right? Yeah, but this is how it happens, right? So okay, we got questions asking where you find the true stochastic. For those of you guys who want to find the true stochastic, again, just head over to the forexarmy.com, go to TFA Trading Tools, and there's a true stochastic for you over there. Okay, I'm just gonna reply to you. So if you guys want to, you can go find it there. Okay. Okay. Now, so yeah, so this is one way that you can use instead of just playing the reversals, right? Instead of just playing the reversals, what you do is that you closely watch price, right? And when price actually breaks this level, right, that is where it gives you a leading indicator that you might be seeing a very big drop from there, right? So this is called using stochastic to forecast when a breakup might occur, right? So you could also, draw, this could be in line with a trend line. It could be in line with a resistance. I'll be showing you more of how to use that later, right? I'll be showing you more of how to use that later. Okay. Now I'm going to touch a little bit on divergence because I can see people asking for divergence, right? Um, so I can see some people asking about divergence. Okay. Now, how do you use this hidden level for divergence, right? So the important thing to look out for is what I call look for a twin, right? Look for the previous time it occurred. So this is an example, right? We have identified a very nice bearish divergence. So bearish divergence means that price is making higher highs, and stochastic, right, is making lower lows, right? So price is going upwards, stochastic is going downwards. In this case, you can see price is going up, stochastic is going down, right? So in this case, we've identified bearish divergence here. A trick to do it, right? A trick to do it is to look for bearish divergence um, that occurs at the same 94% hidden resistance level. This is a super high probability way of calling reversals, right? This is a super high probability way of calling reversals. It's not easy to find them, but you find them, it worked very well, right? So you can see this is a repeated pattern, right? You see one repeated pattern happen here, right? This is the bearish divergence that occurred, right? And you can see prices going up, stochastic was going down, and true enough, price reversed very strongly. The exact same pattern is happening over here, and importantly, is happening at the 94%, which is the hidden resistance that we found, right? So same thing, big bearish divergence, stochastic going lower, and what happens is that you can see price make a very strong push down from there, right? So usually for bearish divergence, I try to stick for towards the H1, H4 charts when trading. Okay. Now, usually I in this example, I only look out for one previous divergence. I don't need to find 5, 6 different divergence. Finding one previous divergence is enough to help me identify where, what we call a repeated pattern. That's what we're looking out for. We're looking out for a place where um, a previous bearish divergence worked out very, very nicely at a key level. Okay, in this case, the key level was that when price reverses off the 94%, and at the same time it creates a very strong bearish divergence with price, there's a high probability that you see the same thing happen again. Okay, so just don't look too far back, right? Just look for what happened previously, right? If you can find that, usually it's a pretty good setup. Okay, now moving on a little bit more, right? Diagonal levels. Actually, we might be able to cover everything today, right? Because diagonal levels is one of the last things I want to show you guys, and it's a very, very good, it's a very good way of using stochastic, which I understand very few people even, you were thinking stochastic can only be used for horizontal levels, but guess what? Stochastic can be used for diagonal levels too, right? Mind blown. Mind blown stuff, right? So you can see what we're looking for, stochastic is bouncing up one time, bouncing up 2 times, and it looks like it's going to bounce up a third time. This is a very interesting level, right? Yes, the bullish divergence works the other way around. You can just read up on that, right? Thank you for finding it a very cool session, guys, right? For Mark and Marcel, right? So now if you look at price, right, you're looking at this chart here, right? This is a big pullback support. For those of you guys who went through my previous webinars, this is a big pullback support. This is a big ascending trend line, right? So if you're looking at this right now, do you think you're going to buy or are you going to sell? Do you buy or do you sell? What would you do? Okay, I see a lot of people say buy, 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 buy. Low risk buy, looks great to buy, right? Some people saying sell. Now, what would you do if this happens? Stochastic suddenly broke this level, first breakout. Stochastic suddenly broke this recent low. Price is still at a technically good level to buy, right? If you see, there's still ascending support. There is still a overlap support over here, right? But stochastic suddenly broke this ascending and broke this. Suddenly, I see a lot of people say sell, right? Sell because it's the fourth. Benjamin, I think you know. You know your technical analysis, good stuff, right? It's a good buy setup, right? No clue. This is actually if price is on a key level, a hidden support level, that's great. But in this case over here, right? In this case, I would exercise caution because what happened is that stochastic actually forecasted the breakout. So you can see price actually broke out from there, right? If stochastic was bouncing nicely, right, at a key support level over here, then it's good indication that we might be seeing a bounce. But because stochastic broke this ascending level, it broke this level, right? Suddenly it doesn't look that nice, correct? So that is one way you can use diagonal levels to trade. So um even a trend line over 2 points, right? Look for the bounce level, standby. Right. So there are different ways that we can practice this. Notice that the trend line, I actually have 1, 2, 3 touches, so it's actually a pretty decent trend line, right? But it comes together with a graphical overlap support, so it's actually a pretty good level. But the stochastic kind of gives you an additional insight that you might not have gotten, right? And that is what you use for, that's one of the very useful things about using stochastics differently. No one ever said stochastics had to be horizontal. You can use diagonal support, you can use diagonal breakouts, you can use horizontal breakouts. There are a lot of ways that you can use stochastic. All right. So if anything that you can take away from the webinar today is that, expand your mind, your horizon, right? See stochastic differently. Remove the 80-20, remove the 70-30. Try to see what the market is telling you. Tweak your settings, 13, 21, 34, 55, 89, 5, 3, right? See, just see what the market is telling you versus taking what you learned from Baby Pips and Forex Factory and just trying to stuff it into your trading strategy, right? So the diagonal lines on stochastics are broken before the support trend. Yeah, so in this case, right, we can see that stochastic broke from the diagonal support. It broke from the recent swing low support. So to us, price is right at this support level, but stochastic is telling me a different story, right? And thank you for I'm glad you like this webinar, right? Yeah, it works the same way for multiple charts, right? Yes, Timo, this is a whole new level of analysis. We'll go into RSI next round, right? But this is how the institutions use stochastic. It's not just looking at it and just like, okay, 80-20, 70-30, right? This is you combine multiple variations of this with divergence, with hidden levels of support and resistance, with diagonal levels, and that is why you notice that you can use stochastic and you can use RSI at the same time, right? Harmonic patterns, we'll cover it maybe in the part of Fibonacci in the future, right? But yeah, so this is the new way which I want to teach you guys about stochastic. For those of you guys who kind of tune in late, right? I do want to share with you guys. Let me see if I still have it over here, right? So our upcoming webinars, do keep a watch out for it. Today's our webinar on stochastic oscillators, right? We have an upcoming one on RSI, but importantly, from next week onwards and the ongoing webinars, right, we'll have a live analysis session right after our education session. So that means, the very next day, we'll be able to tune in together in a webinar, and you can shoot me with all your questions. We can practice analysis together. We can look at setups together. We can really practice. We Tuesday is to learn. Wednesday is when you practice, right? Because we are here, IC Markets, we're dedicated to kind of teaching you how to not only learn but also to apply. Okay. Now, whoa, Peter, that's okay. I'll read through what you mentioned, Peter. It's really great. I'll take a look at it, right? I'll take a look at it. Okay, guys. Now, what I would like you guys to do, if I can trouble you guys to do, right? And that is that is help me just rate this webinar session from 1 is to 5. And after rating it, what I ask you guys to do is, maybe if you have any suggestions like what Peter has on how I can further improve this webinar, please let me know. I'm going to stick with you guys for a very long time, right? So if you feel that I digress too much, let me know. If you feel that I should focus more on examples, I should focus more on the PowerPoint, let me know, and I'll do my best to kind of improve it. And so that, when you guys tune in the future, whether it's your fifth or sixth or second time, right, you will enjoy the webinar a lot more. Okay, guys. Thank you. Okay, I see it's great to see that we have more than 95% of you guys who rated at least 4 or 5, right? If you rate 1 or 2, don't worry, it's fine. I will not hunt you down. I will not hunt you down. I might not hunt you down, right? But at least let me know why you might rate it 1 or 2, so that I can improve it. Gregory, maybe next round. Okay. Next round. Okay, I'm glad you guys I love it so much. I can see that you're asking for MACD webinars. We'll take a look at that together. Write questions on the webinar topic prior, so that. Okay, yeah. Antoine, that's a good suggestion. Good suggestion. Good place to have. Right. I'm glad. Thank you very much, guys, for your feedback. So the Yes, the RSI webinar will be next week. All right. So what I would recommend you guys to do is really go over to rcmarkets.com, go to /blog/webinars if you guys have access to that. From next week onwards, we should be showing you more webinars at once, right? You should only be able to see this recent webinar, but from next week onwards, keep a watch out for here, because we'll be posting all our upcoming webinars. You can see, just to give you the heads up, the next one is on Tuesday, next week, Tuesday, May the 4th, Star Wars Day. Who knows what I'll be dressed up on that day? Maybe I'll be Darth Vader or something. So yeah, the upcoming webinars, keep a watch out for that. Is next week May the 4th? Yeah, next week is May the 4th. Awesome, right? Awesome. Okay. Screen is still on poll. Oh shit. Oh shoots. Right. Um, all right. Got it. Got it. Thank you guys. We got a good 95% who rated 4 and 5. That's great, man. Now, yeah. So you head over to IC Market /blog/webinars, right? From next week onwards, or maybe towards the end of this week, you should see a lot more webinars you can register for, right? You can see, just a heads up, May the 4th, May the 5th, May the 11th, May the 12th. So every week, Tuesday, Wednesday, we'll be having an education session, and we'll be having a live analysis session. Okay, we're gonna be best friends, or rather, you're gonna see a lot of each other of a lot of time, right? Awesome stuff, right? Saida, I'll try for trading plan. You can look at, if you're looking for trading plans, try to take a look at trade management first, right? We'll go a little bit more into trading plans in the future. Next session and all subsequent sessions will be the same, right? It'll be the same time as this webinar, all right? Okay, that's very useful feedback, Chipendale, right? And thank you, David, right? I'm glad you liked the webinar, right? I just want to read one of the, I saw some very, very long feedback from Peter, so I'm just going to read it a bit later. Okay, that's it from me, guys. I'm glad you guys have loved it, right? First time live, saw the others too. Casual day at work, yeah, I'm pretty casual because my company is more of a fintech firm, so we are very startup environment. We're quite chill, right? I'm always eating snacks. I don't drink during work hours, right? Right. So yeah, if you guys like it, right, do me a favor, just head over to IC Market support and just say that you want more of such webinars, right? I think the support team might go crazy, but yeah, you guys have done great. Now you can see that we have a lot more. From having 2 webinars a month, now we have 2 webinars a week, right? Which is great, because I get to journey on this. I get to follow you guys on this journey of trading a lot more. It's cool. right? No, I'm based in Singapore actually, right? I'm based in Singapore. Now, do I have a book? I I should create a book, right? I don't have a book currently, but yeah, if you recording webinar, if you guys want to right, cheap gold in Singapore. How many people are watching? You know, we got at one point in time, I think we got 500-600 people who are watching. We got thousands of people. Most of the time we got thousands of people who are registering for webinars, right? For those of you guys who want to follow me more on my Instagram, right? You can head over to yeah, my username is Comfy Desmond, right? So you can head over to there. I yeah, you can head over to there. I kind of post a little bit more about my life over there. So yeah, if you guys can follow me if you want to, right? I don't post much about trading. You know, most of the time I just post, I just talk about my cat, right? Cause my cat is so cute, right? Yeah, most of the time I just kind of just talk about my cat there. All right. So yeah, I'm a pretty chill guy, right? I'm glad. Yeah, I'm glad, Fabio. Thank you very much. I'm glad you learn more every time. Yes, all these webinars will be recorded, and you can come to the IC Markets site to watch it. Right. I recommend go watch it, go learn everything about it. Right. Really good stuff there. Okay. Okay, Edward, that's a very good point. I'll check out my candlestick indicator. Right. No, IC Markets does not have an office in Singapore. You can ask them too if you want to. Right. Uh, all right, guys. Now, thank you very much for tuning in. Now, have a stay safe, trade safe, and tune in next week because I get to see you guys next week. Yeah. Peace out, guys. Adios. Bye bye. Thank you. Yeah, I'm just a feel free to tune out. I'm just trying to look at some of the feedbacks, right? So I might be tuning out any point of time now. Yeah, just looking at some of the feedbacks. Yeah. Okay, that's it. See you guys. Bye.